Morning.
Good morning. Hey, Gav, how are you?
Yeah, not too bad. Sun shining. Can't always happy when the sun's shining.
Fantastic, mate. Yeah, it's nice up here on the Gold Coast today as well. Mate, started the new financial year. Obviously, market finished pretty strongly last year, really led by probably CBA is when we look back at the numbers.
Yeah, I mean it's strong today. We could very well finish today on a record high as well, but you did start to see some of that rotation out of CBA yesterday, I think. Be interesting to see how it finishes up today.
Yeah, it did seem like since Monday, or actually even it was late last week, we saw profit taking in CBA heading into the end of the financial year, and it's probably continued. The stock's down about $10 from where it topped out,
Yeah,
I think Wednesday, Thursday of last week. So quite a big pullback.
it's still
And obviously it's dragged the index a little bit too. There's a bit of coming out of the banking sector generally, but then we've seen money go into resources. So strong moves, BHP, Fortescue, Rio have all had pretty strong weeks.
yeah. BHP yesterday had a cracking day. It actually looked like it started to break a bit of a trend as well. It's good to see it flow back into those stocks. Hopefully that will continue on and even out a bit and take some of the heat out of the index from the CBA.
Yeah, excellent, excellent. Right, mate. Well, it's been a pretty active week. We've had a few big moves in some stocks that we probably wouldn't look at every day. One that I've been watching, and it's not a stock I'd normally look at, but it was Domino's Pizza.
Yeah, I'll just bring it up on the screen here, H. There we go. So there's sort of the chart. It had it dropped dramatically on Wednesday. Do you want to talk through what you were thinking there?
Yeah, so yeah, look, it did fall heavily. They have a new CEO that started with them 12 months ago and was seen as a bit of a turnaround sort of expert, was going to just help streamline some processes, which is strange because Domino's always been seen as a very much a technology stock because of their ability to streamline the pizza delivery process, everything from ordering to the processing of the cooking of it, and then getting the delivery done. That they've really been able to really streamline that exceptionally well over the last 10 years. Really had a big fallback from its highs, which was actually at one stage over $100 a share, which is a little bit unrealistic, but sitting around 17 odd dollars at the moment. It actually has a yield of around 6%. So when we saw the big fall that happened on Tuesday after the sudden resignation of the CEO, it looked very very oversold, and it started to find a bit of support. But looking at it, the with the yield where it is, it looks very attractive. So the trade I've put out to a few clients was to sell some puts in Domino's. So selling an August, I think a $17 put was a strike that I went with. It's a little bit under where the stock is now. Stock's around 17.40, and premium wise, we were getting around a dollar when I originally put the idea out, but today you're probably getting sort of 75 to 80 cents, which is still really attractive premium. It is out to the August expiry, but if you look at Domino's, if you got exercised off that $17 put with, let's call it 80 cents a premium that you receive on the trade, getting in there at 16.20 would be a pretty attractive price to buy the stock, especially with that yield around 6.2%.
I mean, the average target's still 24.82, so that's a fair bit of upside if you got it.
I did look at that this morning. Actually, we've got UBS, Morgan Stanley, and Ords have all updated their research targets following the announcement of the CEO's resignation. So we've got UBS at 25, we've got Morgan Stanley at 24, and Ords are at $28. So pretty positive targets by three sort of pretty large research houses. So yeah, feel pretty bullish on it, and I
Yeah.
think it's a good trade. If someone is looking at sort of $100,000 of exposure, you could sell 50 or 60 of the $17 puts for August. If you do get to buy the stock where you're sort of getting in that low 16.20, 16.30 level, and you've got a dividend at the end of August around 50 cents. So I think it's a pretty good opportunity.
Okay.
Some good premium, and look, a stock that we'd happily buy at those lower levels.
Sure. Hey, I've just put on the screen there the email we that went out to your clients, not to
Yep.
read through, but just as a bit of an example, when you saw the opportunity, this is what went out.
Yeah, so that's what I sent out to a few clients that were sort of looking at basically everything we talk about in our videos here. That's sort of $100,000 of a transaction or exposure to an options trade that you'd be happy to take up the underlying stock. So that's got a group of clients that's their focus. So that was the idea we sent out. Obviously, the premium on Tuesday or also Wednesday when it went out was around a dollar a share. It's just pulled back a little bit, but I still think the idea is very very sound.
Yeah, no, very good. Very good. I was looking at Brambles this week. So with the stock market at record highs, Brambles come back a little bit, but it's still up there. I mean, it's all the price targets and averages are below where it is at the moment. So whenever you see that, it looks like for me, it's an opportunity to sell calls. You could sell the 23.50, which is way above where it is at the moment, and you'd be looking at about 57 cents of premium. So, that's 5 grand on 10,000 contracts, or half that if you got 5,000 contracts. So for me, it sort of stands out as a good one. You could sell them out of the money a fair way, and you're still going to get a reasonable premium for it.
Yeah, look, it has had a huge run looking at that chart, hasn't it, Brambles? I know I was looking at around $14 a year or two back, and it's really rocketed up, probably to levels that do look very, very overdone. So yeah, I think that's a great trade.
Yeah, and the premiums there looks pretty good too. The
Yeah,
last thing I thought I'd mention, H, is just look at one of last week's trades. We recommended selling puts in MCOR. It was dwelling along the bottom there. In the last few days, it's had an incredible run up. I think we were looking at selling the 14s for around 20 cents, so about $2,000 in credit. With that jump
yep.
up, you could pretty much close that trade now for 2 cents and clear $1,800 in the space of a couple of weeks. So that was a nice little trade. I thought it'd be worth just revisiting what we've done in the past.
Yeah, look, it was, and I actually had quite a few clients I did that trade for, and we have actually taken our profits out of the stock. When you sell something for that around 20 cents, if you can buy it back for 1 or 2% of what you sold it for, makes pretty good sense just to clean the risk up.
Yeah, it just takes risk off the table. You've got the money in the bank, then you
Yeah,
can look to do something else then.
yeah,
That's
excellent.
pretty much it.
Excellent, mate. Well, I suppose for anyone who is tuning into these videos, we are going to sort of start to distribute these trading ideas that we've just talked about. To clients or to people that are interested in reading them. So maybe get on our subscriber list. They can send an email link through our website to register for the links, can't they, Gav?
Yep, the website's got a couple of ways of signing up to our different newsletters and these things as well. And you'll see our options ebook there as well. So there's a few ways to sign up there, or you can just reach out through our office in Queensland.
Yep, fantastic, mate. Right, well,
Good.
you have a good weekend,
You
and
too, and I'll talk to you
we'll
next
talk
week.
next week.
Yeah, see you later. Bye.